Hi, I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgren, founding CEO at Lundgren's Capital.
Welcome to Sound Economies with Mel and Peter, an East Meets West podcast by Lundgren's Investor Insights. Here we share what we're focusing at in economies and financial markets from the developed and the developing world. Hi, Peter. How are you this week?
Hi, Mel. I'm good and busy. The markets are keeping us busy. There's no doubt. There's a lot of conversations with investors. Um, of course, that's what happens when markets are moving. So really interesting week and but many good conversations also, for sure. Yeah. What about you?
Yes, Peter. So busy is always good, right? And the past few days, we released a new article on Lundin's Investor Insights where we review the path of the US dollar and the strong dollar policy under this new Trump administration. So it's always a continuing conversation, and we like to talk about how it develops from time to time. And speaking of that, our plate is kind of full for this podcast episode. Today, we'll discuss Germany's political transition and how they are managing, or rather, not moving with the economic plans under the new leadership. Next, we discuss the negative manufacturing sentiment in Japan and what's driving this pessimism. And of course, we discuss more tariffs and counter tariffs between US and their major trading partners. And we also discuss the 10% decline in US stocks, and we are challenging our own sunshiny outlook towards US assets. And as usual, we will look at our forecast for the global outlook for the week. So, Peter, we have always looked at the political situation in Germany, and we like to see how they are progressing or maybe not progressing in this case.
Yeah, that's the key. Yeah. We have covered the German election a couple of times because it's heavily interesting. Yeah, biggest economy in Europe, running for the third year with a negative GDP growth. It is a catastrophe in many ways for the country itself, in particular. It's also a unattractive sort of macro environment for investors. I think some expectations were created for the new, probably upcoming chancellor in Germany, Friedrich Merz.
Mhm.
But the key is he's about to stumble internally also with his fast move forward. It's well known they have sort of discussed and actually together with their probably coming coalition partner, the Social Democrats, SPD, they
Mm.
have proposed big economic packages. I won't call them growth packages. There is some growth incentive there, but it is to get the infrastructure back on track, so to say. Not only the railways, but also bridges and ways and whatever, highways. And then, of course, the very much discussed big package also for defense. Now, that they're trying to force through in the old parliament, so to say. The old parliament is still working. No, and that happens in any country. It is like doing the practical stuff so the country is running before the new parliament is gathered together. Now, in the new parliament, these initiatives will be blocked or might be blocked by the left and right wing
Mhm.
opposition. So he is now trying to force it through with the old parliament. It's a very odd political situation,
Right.
I would say. The key is that he is depending on all votes, like from the Green Party, and he has been so tough to the Greens in the election campaign that they have turned against him. So right now there's no majority for getting these very huge economic packages through.
Mhm.
At some time, he will probably buy as a simply purchase and pay out enough to the Green Party, so they get a lot of demand through. Otherwise, you'll have to wait and then get met by even bigger demands from the opposition that can block the approval. If we look into his own party, uh, more and more of his own party members in the parliament and new PMs that have been elected, they are getting in doubt if he's the right man to do
This
the job.
early?
Yes, he is not even in the seat yet, and he is already stumbling. This is, and again, I can repeat, we are talking about one of the biggest economies in the world. It's the biggest economy in Europe. It is an ongoing catastrophe. Should investors be worried about it? Yeah, it's not a good environment, yeah. And we
Mm-hmm.
are seeing investors moving. We will return to that, but there are coming inflows into Europe again, not necessarily just because of this pretty huge packages that he wants to
Mm-hmm.
get approved, just a smart value consideration, but we are seeing flows from US coming into Europe again. And now we have this a difficult situation. It is not a straightforward situation, and it is,
Mm-hmm.
of course, worse for investors to keep an eye on. Um, it is actually very weak, to be honest. So he is not having a particularly good days in the office right now. So absolute worst to keep an eye on.
Yes.
Yeah, I think that was sort of the European part of this today. Um, let's move to Mel. You have
Yeah.
some good
Well,
stories.
sadly, it isn't as bright either. So we've seen that manufacturing business sentiment in Japan has declined to a negative 2.4% print for the first quarter of 2025. It's the
Yeah.
first time in a year since pessimists outweighed optimists in the manufacturing sector of Japan. And um, the negative sentiment is expected to continue to the April to June period. So the first half of the year basically is bleak for manufacturers.
Mm.
There is a mix of reasons for this negativity. So it applies to both business conditions and domestic economy outlook for among the companies surveyed. And though it might seem that it could be said that, maybe this is a reaction to like the what's going on in global trade or weak global demand, but we argue that it's largely a domestically driven concern. So we know
Okay.
that Japan is also grappling with rising inflation, and unlike many other central banks, which are on the path to cut interest rates, they're actually raising interest rates. And of course, that's not so good for business performance because it also disincentivizes consumers from buying since access to money is becoming more expensive.
Yeah.
And we also see that the PMI numbers for manufacturing are below 50. So they are not operating at optimal production levels. One sector in particular that we can mention is the automotive sector. So auto sales were down 9% last year. So that didn't really go well. And we did discuss a few episodes back about the attempt of Nissan and Honda to pursue a merger just so they
Mhm.
could be stronger to face Chinese brands or contend with American brands in this volatile global environment. But that fell apart in February. And Nissan, for example, is also undergoing a structural change in leadership because they're really trying to bring it back to profit. So that's the reality on the ground among Japanese manufacturers. They're also grappling with job cuts. So some companies have resorted to layoffs, and of course falling sales has been a trend. And I I think it's more there is also this cultural aspect to it. Like people don't really like to buy the latest, the flashiest stuff. So as long as it works, they're going to keep it, they're going to use it. So that's something that's keeping manufacturer profits low or even at a loss. So, yeah, not exactly bright outlook either. Although we will see, of course, higher interest rates from the Bank of Japan would kind of bode well for investors. But regarding domestic consumption, it does the opposite, Peter.
Yeah, yeah. And what we have been discussing internally also is when we talk about Japan, as you say, these negative indicators and the automotive sector troubling itself, maybe even. It is much more a domestic story. It is not a Trump story. As
Mm-hmm.
the mood is not negative due to Trump, but simply through all other cases. That is a bit important to have a discussion about, because if we look into the news, everything is about Trump, but the world is a lot more than Trump, and that is important to look through. And it can be difficult also for us all of us being a part of the financial markets, because we are also bombarded by what happens in the news, and it all seems to be a sort of a Trump function, but it's not. Good. Yeah. Okay. So that was not a fantastic sort of outlook either. Do we do we have anywhere we can look, or is it are we truly seeing sort of headwinds? What do we say?
Previously, we also talked about China and domestic consumption. So the focus among economies mainly is to look for other sources of growth, mainly domestic growth, because of the context of this highly volatile global trade environment. Some countries appear to be performing better than others. So we saw from China, from our China discussion last time, that they're focusing on stimulating private consumption, so that is good, and that improves our outlook for that market. But when we look at something like this story in Japan, where domestic consumption is, or domestic demand even, is weak, so that's something that we are monitoring. You also pointed out correctly that, yeah, there is this impression that everything's Trump related, but there are ways to, tackle the situation
Hmm.
internally. They're not necessarily all shielded from the Trump effect. Some are hit worse than others, but that's where the difference lies. The response among economic managers or governments. So yeah, it's not as sweeping as it appears in public.
Yeah, a bit sort of what we said, trying to challenge our own
Right.
sunshine outlook, where we say that the world is actually pretty robust.
Mm-hmm.
We see a lot of upsides, yeah. But now we have seen the U.S. stock market turning into as a dropping 10%, or S&P 500 dropping 10%. This is sort of what is reckoned as being in corrective territory,
Yes.
so to say. This is obvious a Trump effect, I would
Mm-hmm.
say. Yeah.
Right.
Particularly Wall Street was actually bullish after Trump election. That would be good for U.S. Corporates. And now he's bullying around with the tariffs. And as
Yes.
mentioned before, he is as it's a magnet for all news agencies, for all media, for journalists. Whatever he's saying,
Mm-hmm.
journalists are diving into it, as a sort of spending a lot of time on what Trump is saying. Now, the world is much more than US. The world is much more than Trump, and that's important to keep an eye on. And it is like very often I compare it with a magician. When you see it, the magician on the stage, you don't you get distracted, yeah, and you don't see what really happens. And that happens now and then in the financial markets, global financial markets, and then we see it now that it's not only Trump; it can be a lot of other situations where people's attraction are very much focused on one issue. Now, the very good news are that we have the past just take the past decade of in the global economy, as not only tens of millions of people, but hundreds of millions of people have actually moved upwards in what we would call the domestic middle class. Yeah,
Mm-hmm.
wherever they are in the world, they move upwards to the lower middle class. They have got a new fridge. They might have got their own home, a real home to live in. They want to buy more durable goods for the kitchen. They might drive in a small car. They want a bigger car. They might start to travel a little bit, and they want to travel more. And there are hundreds of millions of people out there representing this move, and it is very, very strong. It is much stronger than we believe and what we see. And that is actually sort of what we, when we look through, particularly in Asia, we see the 5% GDP growth in many countries,
Mhm.
where you in the Philippines always have been in the very, very top. And it's a really favorable country for talk about growth. But there's so much move that is much more stronger than Trump running around in the world and threatening with tariffs. And this is an important part of our global outlook. Actually, what is happening now is we have in our sunshine outlook been talking more and more about more and more clouds on the horizon, but these clouds we are talking about, this is what is happening now in the US stock market. More investors have also seen these clouds coming. And of course,
Yes.
what happens is people, they react immediately. We don't wait 6 to 9 months for the cloud to hit us, then we escape. Yeah. But I would argue that most of happens around Trump is actually backfiring into his own economy more than
Right.
anything else. Of course, there will be some sectors that might be hit if he introduce tariffs, like against Canada, or if he wants to impose a 200% tariff on French sort of as a champagne and wine. Yeah,
Yes.
that will hit our friends in the in the French vineyards. That is for sure. But if we take the global perspective, it doesn't mean the same. It doesn't mean anything at all. But what happens is that the middle class in the US that voted him into the office to fix their problems, and the
Yes.
problems is the same. There's not enough money in the wallet.
Right.
That is backfiring. So
Yes.
he is not getting the electricity prices down to the half what he promised in his election campaign, and the price on eggs will not go lower. Yeah. And in general, people will turn even more sour on the economy in the US, and that's what we're seeing right now, and that's happening pretty fast. It's an amazing job actually that he's doing it this fast. We who might said okay, it will happen a bit slower, but he's doing it with good speed, and he's actually crashing the US economy more than anything else. So it is absolute fair that the US stock market is going lower.
Right.
And as mentioned earlier here in the start, we are having conversations with investors, also large investors, who are
Mm-hmm.
moving capital as investments from US to Europe. And that has nothing to do with because they have unhappy with Elon Musk or Trump or whatever. Most of the arguments we see is actually a valuation argument. US companies look expensive, and European companies look sort of cheaper.
Mm-hmm.
I fully recognize that argument, though we should always remember as investors that the high valued companies traditionally are the companies who actually over time gives the best return because they are the most attractive. So investors are good in recognizing good companies.
Mm-hmm.
Um, that as one point, and there is no the macroeconomic outlook for Europe is not the most determining factor for stock market. That is
Right.
actually the companies themselves, their profitability. But the macro in Europe is not attractive and it won't improve. So I think that we are seeing some typical long-term investors
Mm-hmm.
moving their positions for short-term reasons, and that is very interesting. That is not very often we see that. Um, but this is what I see is going on with Trump. This is like much more backfiring. The rest of the world is actually moving forward, and it's very strong. And apart from Europe, that could be stronger.
Yeah.
Um,
I'd like
but
to
we,
zoom out of the magician comment or like likelihood of Trump. When we liken him to a magician and we've seen his act before during his first term, can we see or do we see more of his audience, in this case investors and like policymakers of major economies, they see through his act now better than they did before because they've seen it already. They probably studied it closely and see that, yeah, the impact now is not really targeted towards us more than it, makes life harder at home for him. And you mentioned like the middle class are more squeezed. So now they wanted cheaper prices. Now they're getting it at much more expensive costs. And if you wanted to drown out your sorrows, you had to spend extra just to drink French wine, for example.
Yeah, it's this is a very good Christian consideration. I actually observe it the way that the politicians that are weak in the leadership
Mm-hmm.
and actually in their own conviction about how to run the business, they are scared of Trump. As a some European leaders, they're really scared. And that's because European political leadership has been doing the same for 25 years now, building a social state, even more than the world.
Mm-hmm.
But if you look into the Asian region, that has just has really moved ahead every year with strong growth, as strong as possible.
Mm-hmm.
The the self-confidence is simply so much stronger than I can tell you now. I still see myself as young Mel, but I've seen the deep financial Asian crisis in let's say 1997 as an example, and that was an Asia without self-confidence. That was
Oh,
an
yes.
Asia that was just hiding themselves, surviving on whatever there was to survive on. And that was really in terms of population, the biggest region in the world, but just trying to survive. Yeah. This is not what we see. We see a extreme strong region, very self-confident. Trump doesn't mean a lot. He can spread. US is the biggest economy in the world. They are
Yes.
powerful. Oval Office is the US president. They are powerful.
Mm-hmm.
But people are not afraid as they are in Europe. And what Trump he could provoke, as he is acting as the Oval Office is the center of the world. Now that is always dangerous. If that is how people they act, I should be sure that this is how it is, and it is not. If we're thinking a bit longer, a bit far ahead, on a day like today, what he could provoke is that two countries that we would say they would never really become friends. Um,
Yes.
if India and China they see an advantage, it's going together
Mm-hmm.
for some time, and then they'll take the individual battle afterwards in 15 or 20 years. But if they see an advantage in saying, okay, it's enough with Trump and he's bullying around, uh, we partner a bit more up,
Mm-hmm.
then we have two countries with each almost 1.4 billion people. It is close to as a, in China and in India alone. There live so many people as in the whole Africa. Okay, so we are talking about if these two countries they team up, they will get so much backing in big parts of the world that US is sent to the corner. And this
Right.
is what he could do. It's just to take into perspective, say, is the world strong? The world is actually
Mm-hmm.
very strong. And there are hundreds and hundreds of millions, as mentioned before, of consumers. They are powering ahead. And they want to power ahead, and this is what they expect the countries to offer.
Mm-hmm.
So, challenging our own sunshine, the world is actually strong. Some of the clouds we see on the horizon, do they move fast forward? Yeah, maybe, but yes, they're still there.
Yes.
The clouds we are talking about are more fundamental. Is actually more US going into even more fundamental problems, issuing more debt and all this stuff. That we are not happy about. Is a correction in the stock market okay? Yes, of course. If we look on our overweight risk, we have been running since the low in 2022 autumn. Yeah, so it's a very, very long run
Mm-hmm.
where we have been overweighting risk, and they would say a 10% correction on that long run. It's not enough for us to change this fundamental positive outlook on the world. Not yet, not yet. We are willing to take a correction and saying it's not enough to speculate in saying, okay, we should go underweight stocks as an example. We're not there yet. We're actually happy for
Mm-hmm.
for the strong.
Yes.
So this is a bit sort of all the things that we are discussing, but as this conversation shows, we have things up for discussion internally. We really have, and
Yes.
it's a big thing. And should we be more nervous?
Well,
Um,
yeah. That is always the question, Peter, right?
so far not, and that's
Mhm.
actually the important outlook. This is just to share what we are talking about internally, and all the potential directions that the world could take. So, how's the
For
Asia part?
Yes. So for Asia, it was a really good point about Asia's self-confidence among the Asian economies. Like in general, Asian economies are stronger, well positioned to sustain rapid growth that the America and Europe side of the world can only dream of reaching again. 5% is very strong annually. And there are still more than enough reasons to stay optimistic towards Asian assets. Um, Economies know what to focus on, and that's mainly domestic demand. And there is a really big market here. As you mentioned, literally billions of people you can serve domestically before you even look at global trade. So there is some concern that we monitor, but the optimism prevails, Peter.
Good, yeah. So if we should finalize with our sort of formally our global outlook, do we still trust in the sunshine?
Of
Well,
course we do. Maybe pack an umbrella and sunglasses to navigate both sun and rain, but yeah, the outlook is still positive.
also, we are also concluding after internal conversations, of course, still overweighting risk. And that means we still like credit risk in general. We like
Mhm.
the emerging market, particular Asia, country risk. We like to overweight stocks in general. We have our favors, that is Asia, and we still actually overweight US and we underweight Europe. We are well aware of the correction in the US stock market. We can change our view at any time, but we also need to see some more evidence of things just going down. As a lot of US companies are actually doing quite good. Yeah. This is we do see the sunshine. We have the clouds, as always discussed the past months. Are they growing? Some parts of the world, yes.
Mhm.
Otherwise, we stay with the sunshine so far. Yeah.
Yes. That's all we have for this episode. Thank you, Peter, for sharing your views as usual. And thank you to our listeners.
Yeah. Thank you. It was great.
We'll be monitoring global developments and we'll share what's interesting in the next episode of Sound Economies, Mel and Peter on the Global Financial Markets, a podcast by Longines Investor Insights. Thanks for tuning in. For expert insights on the go, download the Longines Investor Insights app for free. For investors, we offer very exciting and high quality alternative investment funds, including our top rated Mutual China Fund. To know more, visit longinescapital.com.